Ladies and gentlemen, welcome to my first PipFarm CEO interview, this time in my own channel. We have here with us PipFarm CEO James Glyde. James is starting to make some moves on Twitter and on social media. We recently saw that. And I'm very curious to know a little bit more about his past because he has a lot of experience in the fintech space. So James, welcome. And my first question is, how did you get introduced in finance? Did you start in the brokerage space?
Yeah, so very different to a lot of other people in this prop trading industry. I actually started working in a broker. So my experience really does start working inside of a brokerage, beginning with sales positions. So I started selling liquidity to other brokers. This was back in 2010 when many brokers actually were running the STP model rather than the kind of prolific B-book model that is occurring today in the market. So in those days, the technology was very different to what it is today. Trading platforms were very different too. So the operations of running a broker 15 years ago, much more complicated because you didn't have those technological aids. So I started there in a company called TopFX. They were one of the actually first prime brokers to resell bank and ECN liquidity. So the role that I'm best known for is my position at ex-cTrader as the Chief Commercial Officer. And in this role, I was responsible for promoting the platform to brokers all around the world. At the time, this was very tough because MT4 was much more prolific than it is today. And the kind of resistance, not just from the owner C-level, but from the operational level. The dealing team, they didn't want to support multiple platforms. It just made everyone's life more complicated. So the resistance, you had to fight every department within the organization to be able to actually make a sale. So the sales cycle selling ex-cTrader back then took 2, 3, even 5 years. But we can see the hard work that went into all of those years paying off today, because now there's over 100 brokers offering ex-cTrader and now many dozens of prop firms offering it too.
Yeah, that is interesting. So you are saying that selling to ex-cTrader in the beginning was quite difficult. And my question is, why was MetaTrader always in front, let's say? Why would brokers choose MetaTrader instead of ex-cTrader back then? If ex-cTrader is better than MetaTrader, and we know it is because of the technology and all the functions that ex-cTrader has.
It's not just one reason. It's like a combination of several smaller reasons. So one reason would be for a broker to offer MT4 or MT5, they need to have their own hosting, right? Because it's just a software license. So MetaQuotes, they would just install this piece of software on your server and then you have to run it. So the ex-cTrader model was very different to this. It was a software as a service. So you had no hosting, you didn't have to do any of this stuff. But then when you try to pitch this advantage, like, oh, you pay extra for this service, but you don't really need it because you are already hosting your own trading platforms and you could just host this next to it. So the price difference was one challenge, because you're selling these kind of extras, or you're providing these extras that are lost on some organizations, especially larger ones. The idea of there being a third party responsible for hosting their trading platform was this completely alien concept. And they already had all of the network operations guys to handle all of this stuff. So when you say you don't need these guys, then you start talking about making people redundant. And then you start getting challenges from those stakeholders. And then you have a dealing team and they're used to using one platform, and you're saying, well, now you need to have twice as many screens in your office to take care of this other trading platform. And then you have the customer support department. You're saying, well, now you need to learn this whole new platform and give support on that. And then you have a marketing department that you need to then say you need to now do all these new campaigns for this product. And you have an accounting team, and you say, well, now you need to take care of all of these transactions, and you need to monitor all of this stuff. So you're kind of talking about reshaping an organization, and it was only really, really big organizations that could kind of justify this because they had the most to gain. Back then, if we're talking about like 10 years ago, the proportion of MetaTrader to cTrader users was about 90-10. Today, it's about 50-50 for the brokers that offer both platforms. So it's a huge difference, and you're actually opening the door to new business when you add cTrader. But before, it was more of like a novel thing that you're offering something your competitors don't. And that on its own was a huge win for the brand to have this like first mover, early adopter, providing alternative technologies for traders. But for a mid-tier brokerage, they would have to use a lot of resources to add it. And this was the biggest challenge is you're not just selling to one person, you're selling to the head of about a dozen departments and trying to get all of them to agree all at the same time. And that's all of those collective reasons is what made selling cTrader very challenging in those days.
And you think now because probably because of the selling of cTrader, that other trading platforms can be more easily introduced and sell to these brokers?
I would say yes, but it doesn't mean that those other trading platforms are as sophisticated, right? So one of the other challenges with cTrader, again, going back 10 years, is with MT4, you have your own server, you have kind of access to this backend, right? So you can modify any of the functionality. You can build your own plugins, scripts, make it work in a different way to what it was designed to work. With cTrader, it doesn't work that way. So you had to have everything you needed designed by the software vendor. And if that feature that you need doesn't exist, then there's no way around it. So you either have to wait or request. And with MetaTrader, you can just build it yourself. While this has a lot of practical business advantages to be able to build plugins on a very important business tool, there was also a lot of controversy about this because plugins, you're changing how the trading platform works. And are you going to change it in a good way or a bad way? And this was actually one of the main selling points to traders about cTrader is the broker doesn't have any access to manipulate any of the functionalities. Whereas in MetaTrader, who knows what they could be doing.
Okay. Okay. Well, one question. We all know, or at least we heard stories about the extravagance of the world of brokerage and finance. Do you have any funny stories regarding back those days?
I do, yes. I'm not going to tell you about them.
Okay. That's a secret. But
Yeah.
you confirm that is some extravagance there.
There are a lot of characters in this industry. Like, it attracts some very interesting people, some very bad people, but some very interesting people. And maybe I could actually tell you about one job interview I had in, I think it was 2012. I went to this interview. I stepped into this office, walked up the stairs, went to the meeting room, and I was expecting 1-2 people interviewing me, right? Guess how many people was in there? 10. There were 10
Oh my
people,
God.
but they were all candidates. So this was a group interview, and this was, I didn't know these existed at the time, so I was introduced to this concept of a group interview. And for me, it was a little bit overwhelming, I would say, because again, you have these expectations. You prepare for one scenario, you're thinking about what should I say in a one-on-one interview, what kind of questions could I be asked? And then you have like 9, 10 other people sat, around a table with you, and the context completely shifts. So I don't remember what specific questions they asked, but one guy, he started reciting one experience he had when he was selling binary options. So for those of you who don't know what binary options are, it was rightly or wrongly called trading. Basically, you have this 60-second period where you bet whether the price will go up or down within 60 seconds. And if you're correct, if you're correct, you make 80% of your bet, your investment. If you lose, then you lose 100% of your investment bet. So this guy, he had a lot of success at his previous job selling this product. And he had one teacher from the UK who received an insurance payout after losing his leg. So he had like £80,000 compensation for his accident. And this guy was very proud that now the binary options broker has that £80,000. So this story, it shocked me. And as I recall, I didn't say, I think I said, I answered what my name was, right? That's the only question I answered in that interview. And then there was like other stories like that, but this is the only story that I cannot forget. And
yeah,
a week later, I get a call to come back they said another interview. I go in and they give me the letter, they make me an offer. And I asked, what did you see in me? Like, why did you give me this job? And she told me, I saw a hunger in your eyes. Anyway, yeah, she saw hunger in my eyes. Anyway, I left, and as I was leaving the office, guess who passes me in the corridor? Same guy.
Same guy.
Yeah, the same guy.
Damn.
So yeah, I told them I was looking for other opportunities, and that was it for me in that company.
Yeah, I can imagine. The ethics being stronger than oh my god, the hunger in your eyes.
Yeah. After I left ex-cTrader, I moved to the Czech Republic, where I started working with Purple Technology and their fintech group. And I was working on an electronic money institution. So we were applying for a license in Singapore. We got one of the first major payments institution licenses in Singapore. And also we're working on setting the company up in Lithuania too. So I spent a lot of time in Lithuania. This was sort of after the lockdown era. So the whole project, it took a very long time. No one could travel, meet regulators, do face-to-face interviews with candidates. So it was a very challenging project because, of the conditions. In the end, it was very successful because we got the license in Singapore and unlocked like a whole new asset for the group. And to the end of my time at Purple, they started working on their brand, Fintoki. So they have this huge prop trading support division in Purple Trading, and then they also have that prop trading business. And towards the end of my time at Purple, I was discussing an opportunity with Scandinavian markets. And this is a very well-known Scandinavian broker, again, operating since 2010, so huge amount of experience. And they just started working in the prop trading industry as well. And they needed some help with managing operations and taking care of their trading platforms. So I reached the end of my, let's say, usefulness purple because all of the projects were set up, all of the management teams were established. So I was looking for another challenge. And I moved to Scandinavian markets and Nordic Funder, and we started building prop trading business there as well. And we did this for a year and a half. And after working at Nordic Funder for a year and taking this brand from one or two active traders, we actually built it up to almost 1,000. Huge success. And we wanted to really develop this. We had MT4, MT5. We're going to add ex-cTrader, but the vision of the owners was very different. They wanted to focus on different stuff, but I could really see the potential in the prop trading industry. And with help of one investor, I decided to leave Nordic Funder and start PipFarm.
So now that you had your first experience with the prop trading space, what did you find more interesting about the space? Did it surprise you that everyone was trying to trade simulated funds? At first, for me, that was not a shocker, but it was like, is this really happening? We are trading demo accounts and making money. And now that we see some brokers coming into this space, this is probably going to be the future for a couple of years. But in the beginning, I can imagine that it was like a little bit of a surprise to understand that traders were going into simulated funds. Am I correct, or am I completely wrong in saying that?
Yes and no. I was surprised that basically demo accounts had been made into a product that people pay for. That surprised me. But the idea of there being no execution happening behind the trading account, that doesn't surprise me, because that's how the business model of the online, this is how the online trading business model has been working for decades. So the idea that when a trader places a trade in their account, that it doesn't actually get sent to anyone, it's internalized with the broker. This is pretty normal practice and has been for a decade.
Okay, so that is normalized, but in the brokerage space, correct?
Yes, correct.
So basically, a trader that is trading on a broker may or may not have his trade being sent into the market.
Usually
correct?
Not. So yeah, correct. So the way that it works is it acts like a book, right? So you have 100 traders who are long Euro USD. You have 100 traders who are short Euro USD. Yes, they all have different entry prices, but you kind of aggregate all of that, and you can say, well, if all of those positions are equal size for the sake of simplicity, and say they're all one lot. So you have 100 lots long, 100 lots short, you have net 0 position, right? I know it's not as simple as that, but generally, like the risk is kind of offset. You may have a few differences because of the differences between the entry prices, but in a general sense, you have no exposure, right? So then why would you go and pay execution costs to a third party to take away this risk that took itself away?
Yeah, that is interesting. But can all brokers do that, or just unregulated brokers do that?
No, any broker can do this. This is within the regulatory scheme, right? So in Europe, for example, there are different license types. So you have one license type, which requires 730,000 euros of capital, tier 1 capital. And if you have this license, then you're allowed to do, it's kind of called market making, but it's not exactly, because you don't make the price. You're just using a price feed, but you are taking the other side of the trade. And again, it sounds very evil that you are taking the other side of someone's trade, i.e. you profit if they lose, but it's just a risk management technique and an efficiency technique that if you have thousands and thousands of customers, you have some that are long, some that are short, and why not just let them offset each other rather than going out of your way to add significant complexity, cost, and even risk, actually, because you're having to hold credit with other financial institutions and they may or may not be sound. You don't know that. So there is always a risk. So it's better that you be self-sufficient and you manage the book yourself. But then you have this other license type, which I'm not sure if they still offer it. It's been a while since I looked into it. But if you have just 125,000 euros of tier one capital, then you have to STP everything. So you're not allowed to hold any positions in your company. You have to send everything to an external liquidity provider.
Okay, interesting. So going back into the prop space and particularly PipFarm, in the last, let's say 1-2 years, the market of the prop firm just blew up in amounts of companies that were reaching the market. And so traders have a lot of options to choose. But the majority of the companies are very similar. They all offer basically the same challenges with very similar prices. Basically, everything is the same. So what is, how do PipFarm has, let's say, different options?
So the idea when we were going to launch PipFarm is we wanted to be the only other or the only cTrader prop firm that has a one-stage challenge. So everyone knows FTMO has had cTrader for many, many years, but they are notorious for not offering a one-stage challenge. So the vision behind PipFarm was to be the only one-stage evaluation on cTrader. Before we could launch, now MetaTrader is gone. Every prop firm, every decent prop firm has cTrader now. So the competitive advantage that we initially had evaporated. So then we had to think, well, there is literally no point in being in this business unless you have something to offer that is different to your competitors, right? And we can see the symptom of this. Everyone is competing on price, which is the worst thing you can compete on because you just have to compete on lowering and lowering and lowering. And if this wasn't a risk product, then that's just depressing. But now it's like systemically wrong, right? Competing on price, you have always a bargain version of everything. You have like Coca-Cola and you have bargain Coca-Cola that is like the brand of whatever supermarket you're in. So if you're going to do that with a prop firm, you are really just a ticking time bomb, right? Because you know how much your product costs if you're manufacturing something, but here you have risk. So competing on price with a risk product is really a dangerous thing. And we're kind of seeing the consequences of that. It's not just about price, it's about malpractice, bad ethics, all of these things as well. So we had to really take a step back and think, what can we do to be different? Because again, I don't want to compete on price. That's not a good way to run a business. So we engineered this experience PIPS program, which is instead of buying add-ons, which a lot of other prop firms do, add-on meaning you want a 10% more profit share, you can pay extra for your challenge, which you may or may not pass. Or you want faster payouts for an account which you, again, may or may not have, you can pay more. This, I don't think, is a very nice practice because you're kind of preying on people's desire to make as much money as possible. And while it's their choice, surely people can choose to buy or not to buy those add-ons, I think it's much better to do what we did. And we have this loyalty program. It's a combination of loyalty and experience. So every time you buy a challenge, you get some experience points. Every time you pass and actually demonstrate an experience and some kind of success, then you also get points. So we have these different milestones in our program where traders can earn these experience points and collect enough, you unlock a rank, you achieve a rank. Every time you are promoted to a new rank, you unlock these rewards, we call them power-ups. So If you want more drawdown, you can use this program. If you want faster payouts, larger payouts, all of this is delivered through this program.
Very
And that's how
interesting.
we're different.
And yeah, definitely. I saw some other things that other companies are doing, but like the experience program seems very good to create to grow the loyalty of the customer, which is something that I believe the most companies have difficult in to have the loyalty of the customer, because like I said, everyone is basically selling exactly the same thing with just some minor changes and almost with the same price. So there is nothing that can attach to the loyalty. People go with the lowest price and like 5 or 6 companies that they trust. So that is interesting. What were the challenges that, you already talked a little bit about that, but did you have any other challenges that you faced when you were building PipFarm and getting PipFarm into the market?
Yeah, so we went down, so we did have challenges, and most of those challenges were related to technology. We decided not to use a third party vendor. At the time, there was maybe 2, 3, 4 credible vendors that had a advanced solution that we could use. But the problem was the fees. So not only did they want like several thousand per month, tens of thousands setup fee, and then they wanted 25% of your monthly revenue, not even the profit, the top of from the top, you know. So this would have made the whole business model unsustainable, at least in my view, because when you add there the marketing costs as well, marketing a year ago cost about 20% of the revenue. Now it's even worse because of the competition. So I think that one of the reasons why some of the companies are struggling much more than we are, yes, we struggled in the beginning because we had to put a lot of time and effort and resources still to build the system. Now we're benefiting from it because our operating cost doesn't increase with every sale. We have reached the point where we are now benefiting, and it only took a couple of months. So yes, it was expensive in the beginning, it was slow in the beginning, but now we are seeing that we have already like benefited from that investment. And so if you think about some of the other firms that are paying 25% to a technology provider, 25% on acquisition costs for traders, maybe 10% on affiliate fees, right? And then they're giving discounts as well. Then you have to pay all of your staff and salaries. There really isn't a lot left at the end of the day. And then however you manage the risk, you've also got to do payouts to the profitable traders. So I think some companies by now, they are running a charity.
That is interesting. Do you think that the golden era of prop firms has already gone by?
It's hard to say because there are new companies launching every month. I think 2 other prop firms launched on the same day as us. So there are still plans that were made at the start of the year before all of this turbulence happened that people have still committed to and they're still waiting to launch. And I think more will come, yes. I think a lot of prop firms, especially the new ones, they will have a hard time getting traction in the market because what we know from some of our advertising partners is traders are all moving back to the legacy names, right? They want the perception of stability, assurances that they will be paid, that they won't be messed around. So it's very hard to feel like you can trust a new brand. Even with my background and my experience, it was very hard to win the trust of traders. And just saying, you can trust me because I have an experience isn't enough. Like people, they need to see a track record. They need proof. They need to see that other people have had a good experience. And no one wants to be the canary in the coal mine, especially when it comes to risking their money, right?
Yeah, correct. With I would formulate this question in this way. Are all prop firms betting against the trader?
All prop firms are betting that they will make money. And then you have the problem that some individual, a handful of traders, they can make a lot of money in a very short space of time. And it's unpredictable because you have received this disproportionate entrance fee for the challenge, evaluation, whatever you call it. And then the potential of what the trader can make on the upside is essentially unlimited. There is no cap. At least in some companies, there is not a cap. So this idea that you have basically one or two traders who can bankrupt you almost. Yes, probably some prop firms are betting against those traders, but there is a difference between hoping someone doesn't win to making sure they do not win. Like there is a big difference between those two things. So it's hard. It's a very challenging business model to manage the risk, right? Because you're trying to hedge someone who has much less to lose than you have to lose, right? So they've paid $1,000, let's say, for a 200K account. And if they have 10% drawdown, they could lose 20 grand. Obviously, you don't want that. But then they could also make 100 grand. And obviously, you don't want that. So you need to figure out something in the middle that takes care of something. So again, if you're dealing with all of this on a trader by trader basis, it's going to be hard to manage. But when you have a book and you have thousands of traders, then you can start optimizing which trades do you take, which ones don't you take. And you can start trading yourself, which is the whole point of a proprietary trading company. I think a lot of people have forgotten that. When you make statements on Twitter and you say that, yes, we do trading, to say we STP everything is absurd. To also not do anything is absurd. The truth and the reality is usually somewhere in the middle of those two, right? So as a prop trading company, we should do some proprietary trading, right? Otherwise, what is the point? So
I was going to ask, so that is your idea on how to mitigate the risk of PipFarm in the market?
Yeah. So we already have taken several trades to hedge some of our funded traders. And again, is this a bad thing that we are betting against them? Because these funded traders, they actually lost the account, but we copied some of their trades and we made money. So this is the whole business model, right? If you're a consistently good trader, then you will make money. We are here taking some of your trades to also make money. And if you're inconsistent, you will lose the account, but we try to be consistent ourselves, so we are making money. And this is what the whole business is about. It's about taking the trading signals from the community of traders, filtering them, because we will agree that not every trader is incredible and will win all of the time. So we isolate the characteristics of traders who have potential and who do not have potential. We may be right sometimes, we may be wrong sometimes, but as long as we're more right than we're wrong, this is again why we have a risk-reward ratio on each trader, on each trade, just like you guys do with your trading strategies.
How do you, if you can share, of course, because that could be a secret, but how do you, there is some filters that you use to select a trader that's maybe a good trader or a trader that's maybe a bad trader, because both traders can pass a one-phase challenge or a two-phase challenge, but what are the differences between them?
It's not even just about that. It's also who is a risky trader, because you can be a bad trader who makes a lot of money. So we also need to copy some of the bad traders as well, because they could be good traders for a short space of time, because no one is a good trader all of the time, and no one is a bad trader all of the time. Well, some people are, but in general, you can still profit while being a bad trader. And actually, this is one of the flaws that we see in this business model is you only need to be successful for a short period of time, because you have these limited ranges of the evaluations, right? You just need to do one thing before you do another thing, which is you need to make this much before you lose this much. And in between that, like anything can happen. You can trade in any way almost. So it's important that we can also manage the risk of those extremely aggressive and risky traders without having to completely tear apart the benefits of the business model.
So I took a look on your websites and the product that you have on PipFarm, and I noticed that your trailing drawdown, because you offer a one-phase challenge with a 12% maximum drawdown, and it is a trailing drawdown, but you have a difference on the other firms, because what usually happens is that other firms have a one-phase challenge with a trailing drawdown, and that limits a lot the upside and also limits a lot in the payout, because let's imagine that the drawdown reaches the break-even point. The trader cannot withdraw every single profit that he made because he'll breach the account. But I saw that in your firm that is different, correct? The trailing drawdown is different. Can you explain a little bit?
Yeah, so this is one of the big problems that I've seen with other trading drawdown firms is it doesn't recalculate based on withdrawals, right? And the idea that you should penalize a withdrawal makes absolutely no sense. So when it's time to make a payout from the funded account, we do not take the withdrawal as a loss. We readjust the high watermark and we deduct the withdrawal from the high watermark. So we basically reset the amount of profit that was made in the account. And this way you always have 12% trailing. You don't lose your drawdown just because you succeeded and made a withdrawal.
That is very interesting, and that is something that other companies are not doing. And I think that is the reason why trailing drawdown is so hated in this industry. And I personally am not a big fan of trailing drawdown, but watching the difference, but watching the difference that your company has, I like that. I prefer that, obviously, to the other companies.
Yeah. This is also because that's how it's designed in the third-party technology system. So the benefit of having your own technology is you can build it however you want. So this way is actually better for the end user, for the traders. So that's why we made it this way. And by the way, we also have a static drawdown because we misjudged how much hate there was for the trailing drawdown. And to be honest, for a one-stage evaluation, the trailing drawdown, it's not as evil as everyone claims it is. But when you are funded and you treat the withdrawal as a loss, and you can even breach the account just by making a payout of the money you're allowed, this is absurd. So in that case, the hate for the trading drawdown is justified, but I would say as long as you're not penalizing traders on making withdrawal, then it's a lot of extra room for drawdown until you start making profit. And we see that this is appreciated by a lot of swing traders who may take several percent drawdown before they start making tens of percent.
Yeah, that makes sense. One thing, in the industry, that has been a lot of hate for the trading rules because, as we know, the prop firm space is changing. So a lot of companies went down in the couple of months, and a lot of rules have entered in the industry. So we recently saw challenges with cap profits, other challenge with the consistency rule, and another with rules on the news. And we usually had news on the rules on the news, but now they are increasing. So, and there are a lot of firms that are breaching clients' accounts or denying payouts because of unclear rules. but you guys have a different policy around that. You guys have a policy of clear rules, small rules, let's say, and you will pay. So is that correct, what I'm saying?
Yeah, so we have a few rules because it's very hard to govern how people will trade, right? Because it's very hard to govern how people will trade. And if the more rules you have and the more rumors there are about your company having a lot of rules, the more the customer support burden is, because you start to make people anxious. They want to know, if I do this, if I do this, if I do that, what if I change my mind? What if I open a trade by accident and I have to close it quickly? Does that break your scalping rule? What if I'm in a position during news, but then like something happens and I really need to close it? And will I break a rule then? Or what if, is it okay if I open a position without a stop loss, but as long as I put it in 1 minute or 30 seconds, is that breaking? So when you start adding all of these rules, you put all of these like doubts and concerns in traders' minds, and then they are not focusing on their trading. So the idea that setting rules and establishing rules is going to make things better because you filter out things you don't want, I don't think that necessarily works, and you start like confusing people and you start making traders anxious. So, but rules are fine because they are programs and every program does have rules. But the problem I have with the rules that are implemented is most of them require self-regulation. So the news trading rule, like it's one thing to turn off trading during news, right? But it's another thing to say, please do not trade during news. You technically can. And if you do, you will be able to. But if you make money when you do that, then we will not let you keep that money. But if you lose money when you do that, we will let you lose that money. So this is when it all starts to get really weird and confusing and basically unfair, right? And that's my criticism of these news trading rules. When it comes to the profit caps, that's again another very confusing rule, because then you start making people anxious, right? What if I lose 1% today? What if I lose 1% tomorrow? And then what if I make 3% the next day? Like, this is just like one of my 3 trades is working, but it's not enough to cover the losses that I already had. And again, you're starting to interfere with the methodology that traders have. And one of the ideas behind PipFarm and having the one-stage evaluation was just simplicity, getting rid of all of these extra steps. It does limit the data that you collect, but also we get to build this relationship with the trader using our experience points program, because we will retain users for a longer time. We will collect more trading history from them. And also we highly promote our scaling program. So instead of, again, just giving traders one account and just say, go nuts, enjoy it while it lasts, we would much rather really push and promote and nurture this scaling program, because you focus on longevity, consistency, and then they don't feel like they have to rush to make money. And if they keep the account for 30 days, which again, you can only do if you're cautious and consistent, then you get more funding. And 30 days is a very reasonable amount of time when you compare it to other scaling programs where you need to make several withdrawals. You need to keep the account for months. And after all that, you get maybe like 10% or 20% extra funding. So our scaling program is very appealing, but it's also risk averse, because we are requiring consistency to be able to unlock the extra.
Just one question, so I can take this doubt out of everyone that is listening. Do real prop firms that offer real capital use the same methodology of hiring traders as simulated prop firms?
It's a real job, right?
So they don't, you are saying one thing, they don't use a 2-stage evaluation in a demo account?
They do not know.
Oh my God, can't believe you.
This
The
is,
majority of the people think that is in fact true. So please enlighten us.
I don't believe that. I think people are smarter than that. Um, so how does it really work? I don't actually come from this sector of the finance industry, but what I've heard is you need to have a portfolio. You need to have your own track record with your own capital that you've traded. It needs to be more than a few $100s. It needs to be, a sizable amount of capital that you've been managing, like tens, hundreds of thousands. And you need to have this track record for a couple of years. If we're speaking about like Forex, no one expects a Forex strategy to work for a decade, right? They're usually very short term. So if you have a year of track record trading Forex, if you have some professional qualifications like in finance, and you understand risk, mathematics, things like this, you would really need that because if you don't have a university degree, especially something related to mathematics, you would struggle to get a position in prop trading.
So that was an interesting answer. James, I won't take you more than your time that's already taken. Thank you very much for being here. Thank you very much for answering these questions. And I really wish a lot of success in PipFarm because I really think the industry needs someone like you because what we see is that the majority of the prop firms are owned by influencers and very young guys. I don't have anything against that, but I think that is necessary someone with more experience to be in the market and give another perspective to this space. So thank you very much for being here. Wish you all the success.
Thank you for having me.